Good evening, everyone. This is Shital Shah, Secretary, ANMI Western Region. On behalf of ANMI, I extend a very warm welcome to all the guest speakers and members to this webinar on Nifty Indices, Hidden Gems among 420 plus NSE Indices, and Analyzing Markets in Minutes with Cogencis Terminal. Today we have with us Mr. Aman Singhania, Senior Vice President and Head Products, NSE Indices. And we have Mr. Himalay Joshi, AVP and Product Head, NSE Cogencis, as a guest speakers. I welcome them all. I now welcome Mr. Arjun Shah, Chairman, ANMI Western Region, and request him to deliver welcome address. Yeah, Arjun sir.
Thank you, Shital. A very good evening to all of you. On behalf of ANMI WR, it's my pleasure to welcome you to this very special webinar organized in association with NSE Indices and NSE Cogencis. Today's session on NSE Indices and market analysis with Cogencis Terminal is designed to help all of us discover how to use indices and data more effectively in our day-to-day market decisions. NSE Indices today manages a universe of over 420 indices. 121 alone are equity linked, spanning broad-based sectoral, thematic, and strategy benchmarks. For us, this means we are no longer limited to just the headline Nifty 50. We can choose a very precise set of tools to track large caps, mid caps, measure sector and theme performances, or implement factor strategies like low volatility, quality, value, momentum, and even multi-factor portfolios. These indices are not only performance scorecards, they are also building blocks for ETFs, index funds, derivatives, and structured products, and increasingly serve as a formal benchmark for mutual funds and PMA strategies. Understanding what sits behind each index, its universe, construction rules, and rebalancing discipline can directly improve how we design products, measure risk, even communicate to clients. We are privileged to have with us Mr. Aman Singhania, Senior VP and Head Products at NSE Indices, and Mr. Himalay Joshi, AVP and Product Head at NSE Cogencis. They combine expertise on index construction, equity linked indices, and real-time analytics will give us practical insights on how we can immediately apply this in research, risk management, and even client adversary. I would like to thank all ANMI members who have joined us this evening. Your participation reflects a growing importance in data-driven investing and the need to stay at par of the evolving index landscape. With that, let me once again extend a warm welcome to each and every one of you and invite you to actively engage with your questions and comments on the YouTube page. Thank you. Over to you, Aman.
Great. Thank you, Arjunji and Shital, for having us for this learning session. It's our pleasure to share our limited understanding and experience with all the members of capital market. I hope my audio and the slide is clear. So I'll refer to a couple of slides during our discussion. I may not use all the slides, and depending upon how we move, I will navigate across the slides accordingly. This is what I plan to cover in the next 15-20 minutes. We are all aware of NSE and NSE Indices. NSE Indices is a 100% subsidiary of NSE, and 420 multi-asset indices across equity, fixed income, commodities, and hybrids. Nifty 50, of course, is our flagship index. We are all aware of Nifty 50, it's the stock of the nation. In terms of our benchmarks being used, broadly, there are two applications of benchmarks. They are either used for passive funds by ETFs and index funds. There we have a 72% market share on the left-hand side, equity 71, debt 79. Our benchmarks are also used for benchmarking purpose or for performance comparison purpose by active funds. So their idea is they're not tracking the index, but they are simply comparing their performance with the benchmark so that they can quantify the alpha that they've created over the benchmark. There we have a 69% market share, equity 77 and debt 60. So with that background, let me now quickly jump to our concept of the day, which is index. Now we are all aware about what an index is. It's a basket of securities. It's a collection of stocks, which could be equity, fixed income, commodities, real estate, alternatives. It's a representation of the entire market. If there are 2,500 stocks listed on NSE, I cannot track all 2,500 daily. I need a tracker, I need a dashboard for me to know whether the market was positive or negative today. And hence Nifty 50 or any other benchmark is a good metric to look at. Like Nifty 50, there are other indices also, Nifty Next 50, Nifty Bank, Nifty CPSE, Nifty 500. There are 121 equity indices that we maintain. Globally, we are all aware S&P 500, FTSE 100, NASDAQ 100, Hang Seng. These are popular benchmarks globally. An index is used for this. Any index, conceptually. It can be used for benchmarking of active funds. It can be used for tracking by passive funds, ETFs or index funds. It can be used for derivatives, for trading purposes. And finally, it is used for research and indication purpose because it's a gauge of market sentiments. Now, what are the types of indices that we maintain? We have more than 400 indices. I'm sure you are not aware of all of them because it's a huge list, but the idea is to help you understand and navigate through the host of indices that we maintain. So as you can see on the slide, there are equity indices, there are fixed income indices, there are multi-assets. So there are 129 equity indices. As we talk, we launch more indices. So 121 has now become 129 to be precise. Equity indices are further classified into market cap based indices, also called as traditional indices, sector and strategy or strategic indices. I'll talk about each one of them in the subsequent slide. On the fixed income side, we have 279 fixed income indices covering every micro segment of the debt market, be it SLR, non-SLR, money market instruments, CP, CD, target maturity, constant maturity. All combinations of rating indices are there. Multi-assets are equity, REITs, InvITs in some combination. I hope my internet is stable. Yeah. I was talking about equity indices and types of equity indices. So market cap based indices are those indices where the portfolio is constructed based on size of the stocks, large cap, mid cap. So Nifty 500, Nifty 100, Nifty 50, Nifty mid cap 150, Nifty small cap 250. As the name says, they are either large, mid or small, and hence the category is called as market cap based strategy. Second is sectoral indices. Again, as the name says, these are sectors or industries that the index represents. Bank, IT, consumer durables, auto, pharma. These are examples of sectoral indices. Then comes thematics. A thematic is, it sounds similar to a sector like energy, India defense, waves, but theme is slightly topical. It's a combination of multiple sectors. For example, MNC, multinational company, may not be a sector, but it's a theme. For example, mobility is not a sector, but a theme which talks about anything that helps in logistics, right? So that's a subtle difference between sector and theme. Then comes strategy, the most emerging category of indices, also called as factor-based indices. Here, the selection of stocks is based on certain factor. Now, this factor could be alpha, momentum, quality, value, low vol, or combination of these factors. So someone who likes to invest in quality stocks only, let's say, will find a quality index more relevant. How do we define quality? I'll come to that in a moment, because nothing that we do is subjective. Everything that we do is quantitative, rules-based, and objective. And I'll come to those factors in a moment. Right now is the hierarchy of market cap indices that we maintain. So there are 2,500 stocks listed on NSE. But if you look at, and you guys know this better than me, in terms of activity, there are top 750 stocks which are typically active in terms of liquidity and all. So we have a total market index, which is nothing but 2,500 stocks listed in descending order of full market cap, and the top 750 stocks are total market cap index. Now, this is broken up into 4 parts, 4 segments. The top 100, which is the large cap segment. The next 150, which is 101 to 250th ranked stock, is mid cap 150. And the next 250, which is 251 to 500 stock, is a small cap index. Anything after 500 is micro cap. So 100 plus 150 plus 250 plus 250 is 750. That's how we structure our index. And of course, we make more child indices out of each segment. I'll not talk about that here. But this is how we, create the structure of our market cap based indices. On the slide, you see broad-based or market cap indices list. So Nifty 50, Next 50, Nifty 100. In all, we have 19 market cap based indices. And just by reading the name, you can know that whether they're large cap, mid cap, small cap, or combination of them. On the right, you can see 21 sector indices. So most of the major sectors in India are covered in our sector indices, be it banking, financial services, IT, metals, pharma, realty, oil and gas, chemicals. You will have that list over here. Next slide, on the left, you see thematics. So themes are, so there are 45 themes that we are covering, in our indices. So for example, housing is a theme. So Nifty Housing Index. CPSE is a theme. Commodity is a theme. Manufacturing is a theme. India Internet is a theme. Mobility is a theme. Services sector, ESG, Sharia. These are themes, may or may not be exactly squarely falling as a sector. It could be a combination of sectors. For example, EV and new age automotive is not auto. It is those companies which are focusing on electric vehicle or new age automotive logistics, which could be automakers, it could be battery manufacturers, it could be component makers, it could be consultants to EV world, or it could be technology suppliers to the EV world. Now that's a theme. Whereas auto, whether it is ICE engine or EV, is auto. So that's a subtle difference between a theme and a sector. On the right, you see 44 strategy indices. I said strategy is nothing but a factor using which we select the index. So for example, in Nifty 50, we select top 50 stocks by size, which means size is the factor. But what if I don't like size? I like alpha. Alpha is nothing but excess return over and above beta. So I have 3 alpha indices for you. Nifty Alpha 50, Nifty 100 Alpha 30, Nifty 200 Alpha 30. Nifty 200 Alpha 30, for example, is nothing but top 200 stocks, out of which I select 30 high alpha stocks reviewed on a quarterly basis. I like momentum as a strategy. I have 3 momentum indices for you. Nifty 200 momentum 30, Nifty mid cap 150 momentum 50, Nifty 500 momentum 50. Whatever universe I like, I can choose from this universe. Now, Nifty 50, I'm sure many of you would want to know, how do we decide which stocks will come in and which stocks will go out of Nifty 50? I'll spend 1 minute to tell you that nobody decides what will come in and what will go out. It's a set of policy and rules that we have written, and we simply follow those rules in terms of which stock will come in and which stock will go out. For example, on the slide, you can see the list of 50 stocks, which are the present components of Nifty 50. The weightages to each stock is based on the free float market cap of the stock and not the full market cap. And hence you see HDFC Bank has a higher weight as compared to Reliance, although Reliance is a bigger company as compared to HDFC. Now, in terms of review, what I do is I sort all the 50 companies of Nifty 50 in descending order of 6-month free float market cap. So I have the list in front of me, ranging from HDFC Bank to Hero MotoCorp. Now what I will do is, I will look at the bottom 4 stocks. Look at the bottom 4 stocks. I am highlighting it over here. These are the bottom 4 stocks of Nifty 50 with a free float market cap of 69,000, 62,000, 55,000, 52,000 crore. On the other side, you see 4 eligible stocks which are presently not part of Nifty 50. This is in hindsight. We're doing it for history. Okay. Now, the basic rule is that other than the eligibility criteria for Nifty 50, a stock which is not part of Nifty 50 and is sitting outside has to be more than 1.5x or 1.5 times the free float market cap of the smallest component of Nifty 50. So here the smallest component of Nifty 50 was Hero MotoCorp with 52,000 crore of free float market cap, and Interglobe, which is Indigo, with a free float market cap of 1.13 trillion, is sitting outside. Clearly, it is more than 1.5x of the smallest component of Nifty 50. So Indigo will come in and Hero MotoCorp will go out. That is one replacement. The second replacement is IndusInd Bank with a free float market cap of 55,000 crore. Let me just erase, 55,000 crore, and max is sitting at 84,000 crore. So 84,000 crore is more than 1.5x of IndusInd. So max will come in, IndusInd will go out. The third, which is Hindustan Aeronautics Limited, is not more than 1.5x and hence no replacement further. This is the basic rule that we use to decide stocks coming in and going out. It's not a rocket science. It's a very simple process of applying the rules for Nifty 50. Maybe most of you are already aware. Few of you may not be aware. So I thought it would be good for you to know it. Now, these reviews that we do for all our indices, we have more than 400 indices. The reviews are done with different frequencies. So, for example, broad-based indices are reviewed on a semi-annual basis, typically in March and September. Strategy indices are reviewed on a quarterly or semi-annual basis, depending upon which strategy we are talking about. Thematics and sectorals are typically done on a semi-annual basis, but in December and June. So that's a calendar that we follow for review of frequency. Now, one very important question that you may have is who decides, who approves these changes? So there is a very strong index governance that we follow for approval of changes. First of all, all the changes are objective in nature. There's absolutely no subjectivity or discretion of any of NSE members to decide which stock will come in, which stock will go out. There's a method that we follow. The method is in the public domain. Anybody can follow that. And you guys can also predict what changes are going to happen in the coming 6-month period. Yet we have a tiered governance practice where there are committees which are formed, and all these committees are including independent external experts from the market who approve our changes, can challenge our changes and question our changes. And the same day, those changes are put out in the public domain in form of a press release before they are made applicable to the indices. I spoke about factors and how I define factors. So quality is a factor, alpha is a factor, value is a factor, for example. How do we know? Because if I ask you which is a quality company, you may have your own definition. I may have my own definition of what a quality company is. So NSE has its own proprietary definition of each of these factors. For example, alpha is nothing but Jensen's alpha, which is excess return. Quality is nothing but combination of three factors: high ROE, low leverage, and low variability in earnings growth. Value, for example, is a combination of four price multiples: sales to price, book value to price, earnings to price, and dividend yield. Momentum, for example, is nothing but the positive recent returns that a stock would have delivered over 6 months and 12-month period. Low wall, for example, is nothing but inverse of standard deviation. So this is how we define these factors, and stocks which are high on these factors will come into a factor index. Now, quickly, I'll jump into passive funds, because most of you would be wanting to know how these indices are relevant, how are they used. So I told you that passive funds is one strong application of these indices. Now, one application of passive fund is that it challenges active fund management. I'm sure you would have read this quote that every time there's a transaction, somebody who's buying and somebody is selling, both of them believe that they are right, but only one of them between the two is correct. So we are aware of active fund management and passive fund management. Active is all about trying to outperform the market. Passive is all about the nirvana stage where we believe that I can't beat the market anymore. I will rather track the market and simply invest in an ETF or an index fund. In India, passive funds, which is ETFs and index funds, has now crossed 13.71 trillion INR. Globally, it is just about to touch 19 trillion US. India has witnessed a 55% growth in AUM over the last 10 years as compared to global average, which is 20% CAGR over the last 10 years. In India, there are now 586 equity and debt passive funds. I'll cover that in a moment. On Nifty 50 alone, there are 43 passive funds, 19 ETFs and 24 index funds with a total AUM of 4.5 trillion. Just to give you a helicopter view of the passive funds in India, I told you that the passive funds size today is 13.71 trillion. The breakup of that is 10 trillion is equity on the right-hand side column, 2 trillion is debt. And this is ETFs and index funds put together. Of the 10 trillion, which is equity, this one, 8.2 trillion is broad-based, which are nothing but simple index like Nifty 50, Index 50, Mid-Cap 150, Small-Cap 250. 59,000 crore is sectoral, 55,000 crore is thematics, and strategy or smart beta is 50,000 crore. So all of them between 50 to 60,000 crore each. And international is, of course, 18,000 crore now. Gold and silver, we all know, has recently become very popular. So gold is almost a trillion now. Silver is just chasing gold now in terms of size. Now, this is a very detailed table. I'll just, broadly cover it. This is nothing but the benchmark-wise funds availability. So I told you Nifty 50 alone has 46 passive funds, 21 ETFs and 25 index funds. The numbers are slightly updated here, not there. With a total passive size of 4.92 trillion. Like that, you can see different benchmarks and the number of funds availability. So the point is, you don't need to only stick to Nifty 50. Now you have a lot of choices to invest in. So as you can see, there are more than, let me just magnify. In all, there are more than 386 equity passive funds in India, 181 ETFs and 205 index funds. This is just equity. This is the kind of choices that you have if you were to invest in these strategies. That was for NSE. This is for BSE, just for you to know. So in all, there are 67 passive funds on BSE indices with a total size of 2.64 trillion. International choices, Nasdaq, FANG, Hang Seng, S&P 500, overall 25,000 crore. That number was slightly dated. This is more updated, which is 25,000 crore. The overall liquidity of ETFs on the secondary market has also improved significantly. ETFs need to be liquid for you to trade them. So FY 25-26 so far, around 2,500 crore of total trading volumes are observed on ETFs on NSE. I'm sure you already tracked that. So that's about it as a part of the presentation. Maybe I'll pause here and check if there are any questions on the presentation.
Right. So, I've been waiting to ask you a few. So, Aman, for many of us, like you very rightly pointed out, Nifty 50 is, Nifty 50, Bank Nifty, is pretty much what we look at on day-to-day basis. But on Nifty indices, like you mentioned, there are 420 indices, including 121 equity linked indices. Now, how do you classify this universe into broad-based, sectoral, thematic, and strategy buckets? And what is the use case of each of these, especially your factor and your thematic and strategy buckets?
Sure. So, broadly, as I said, this is what will help you understand the classification. So, market cap is all size-based, large cap, mid cap, small cap. If I'm selecting the stocks based on its size only, it falls part of market cap. If I'm selecting a stock because it is falling part of a sector, bank or IT, so the stock is a bank, so it will fall part of Nifty Bank, it's sectoral index. If it is falling into the definition of a theme that I've created, so India defense, for example, is a theme, and if there's a stock which is into defense manufacturing, defense consultation and all, it will fall into my theme. It's a thematic index. And if I'm selecting the same stock because it's a high momentum stock or a high alpha stock observed over the last 3 months, for example, that stock will become part of my strategy index. So a same stock can become part of all 4 indices because of different reasons or different attributes. And hence, we have 750 stocks, but we have 400 indices.
Right. And essentially, by looking at which index is giving us what return, we can drill down deeper and identify the stocks that are actually delivering the alpha.
Absolutely. Absolutely. In fact, let me share something let me share something interesting. Many times people believe that I have a view on a particular theme, right? Should I act upon it using a sector or a theme index, right? For example. So, the answer is depends upon whether you are bullish or bearish on the sector per se, or are you in your mind have carved out a theme from the sector. A very debatable topic is EVs are going to do well or autos are going to do well. That's a very pertinent question, right? Now, if EVs are going to do well, an auto index is not going to help me, right? Because within auto, it is going to be a zero-sum game where the market share will move from ICE to EV, right? Now, I need to play on EV. I need an EV index, for example. Now, you can see on the slide, although I'm not sure if you can read it or not, but you can see it on the slide. We have a Nifty Auto Index with 96% automobile companies and 3% capital goods here and there. But if you look at mobility as a theme or EV as a theme has only 65% weight to autos and 35% weight to other ancillary ecosystems. And those 65% weight to auto is only those autos who are EV focused.
Okay.
So, if I have a view on a particular theme or sector, I cannot uh, act upon it using a wrong index. And that is why you need narrow, specific indices which can basically help you materialize your call, whether bullish or bearish. So if I'm bullish on EV, I would rather want an EV index to act upon and not an auto. If I'm bullish about mobility, which means not just auto or EV, but anything that helps in logistics, including your logistics partners, your courier company, right? For example, anything that helps me move. So mobility is an overlap of auto plus non-auto like courier companies, companies, ship ports, and things like that. So, I just thought I'll give you an example of how, I can act upon my view only if a right index is available.
Right, absolutely. So now, like you mentioned, 121, just equity linked. Now, if at all we look at your core toolbox, what are the 5 to 10 indices out of the 121 that is an absolute must for tracking? What would you suggest?
Sure. So again, if I go back to the pillars of indices here, you know, uh, as an investment strategy, a no-brainer strategy is to keep it simple, first of all. And hence, it's very difficult for anyone to track 128, 129 equity indices. It may not be required also. What is important is A, how the segments are doing. So, for example, how the large cap, mid cap, small cap segments are doing, for example, and hence you need a Nifty 100, a Nifty mid cap 150, and a Nifty small cap 250 from a tracker point of view. Then you need broader sector representations, which are broadly, your financial services as a sector, consumption or consumer goods as a sectors, and other one or two major sectors. And I believe 80-90% of your tracking needs and investment needs should get covered over here. Uh, Between a low cost, plain vanilla Nifty 50 product plus a sector which you want to ride for the next 1 year, 2 year, 3 years. So of course, Nifty 50 or plain vanilla allocation has to be 5-10 years allocation. And your sectoral allocation would be a short-term tactical asset allocation from a sector rotation point of view. Now, this covers your 80-90% of the equity allocation. I'm not talking about non-equity allocation for now. Non-equity allocation is a function of your age and your risk profiling and those things. Within equity, now, we being Indians, and typically we are adventurous when it comes to stock market, and I'm talking to an audience which is no doubt adventurous when it comes to tracking stock market, comes the kicker. Now, the kicker typically comes from strategy indices. For example, a momentum, for example, an alpha, right? Now, these are high risk strategies because momentum by nature is supposed to be high risk, right? It involves a lot of churn in the portfolio. It involves a lot of tracking of recent performers and only buying recent performers. So a typical dashboard, 80-90% will be a market cap plus sectoral and a 5-10% high risk smart beta index strategies like momentum alpha, which gives you that additional potential 1.5, 2% per annum over and above your plain vanilla beta.
Got it. And let's say if at all I'm looking for a factor rotation, what do I look at? I'll break it down. If at all I'm looking at the market from going from risk on to a risk off perspective, what are the indices that are essentially reflecting that?
Sure. So broadly, there are two types of rotations typically. One is sector rotation, another is factor rotation, right? Your long-term allocation towards Nifty 50 kind of investment is fill it, shut it, forget it. But so one is sector rotation. Depending upon your view on the sectors, you can enter, exit sectors, which is a function of your view on whether IT is going to do well or metals are going to do well, and so on and so forth. Factor rotation typically is more predictable, unlike sectors. Factor rotation, for example, momentums and alpha strategies typically do phenomenally well in an uptrend, and they do phenomenally bad during a downturn. So momentum, for example, is the worst performer recently.
Yeah.
Let me be candid. So momentum and alphas are high beta products. They move a lot with so they are very cyclical. They move with the market. If the market is up, it will be further up. If it is down, it will be further down. Low vol and value strategies typically do well during downtrends. So, low vol has been the best strategy over the last 1.5 years. Low vol is low volatility strategy, right? Uh, Again, during downturn, quality is typically performed well because people shift to safe havens and would want to invest into quality companies within the large and the mid cap segments. So quality as a factor also does well when it is more of a stable stagnation period in the economy. So unlike sectors, uh, factors are more, what do you say, optically predictable. Of course, you need to predict whether it's a downturn or an uptrend. But once you've done that, then your factor allocation can be rotated tactically.
Okay. So they can act as bellwethers for people who are just observing it and knowing that look here, low wall is picking up. That means probably irrespective of what my thought is where the market is going, that is not what the data is saying,
Yeah,
right?
absolutely.
So, okay, then how about the factor and strategy indices like low volatility, momentum, quality, or alpha differ from a plain cap weighted indices in terms of construction and a typical risk return profile?
So, uh, a cap weighted index is very straightforward to the eye. If it's a large cap stock, it will go to the large cap index. If it's a mid cap stock, it will go to the mid cap index, and so on and so forth. Large cap stock typically remains large cap over a natural period. Mid cap may graduate to becoming a large cap or a small cap, but typically remains a mid cap over a reasonably shorter period of time. But unlike size, which is more stable, at least in the short run, factors rotate a lot. So a stock which is momentum today may not be in momentum after 3 months, right? Because momentum is a function of price movement and price keeps changing, right? So is alpha, so is value, so is quality. Not that much value. Not value, yes, but quality is a function of balance sheet. Value is a function of balance sheet and market because the denominator is balance sheet and the numerator of a market multiple is market, right? So market keeps fluctuating. Denominator is relatively stable, but market factors like momentum, alpha, low vol is very fluctuative, which means a stock today's low vol may become a momentum because some news came in, right? So so a stock will come into a factor index if it has exhibited that factor. If it has exhibited high momentum, it will come in. If it has exhibited low volatility over the last 3 months, it will come into a volatility index. If it has exhibited low price earning multiple over the last 3 months, it will come into a value index, for example.
So we should actually thank you for doing the screening for us because you're making our life so much easier, right? So,
I'm also a teacher, by the way. So I have this
uh,
uh, habit of oversimplifying things.
no, that helps. So, okay, so each of your indice pages, on your index fact sheet page, the indices page, you have your index constituents and what stocks, stock price, make up the index, the weightage, etc. You also have an index fact sheet. So, what is it that we ought to pay attention to more? Your volatility, drawdowns, sector weights, concentration, to judge whether an index is suitable for a product or a benchmark.
I think the most important thing is the objective of the index first, which is what is the index represent, and represent in on two dimensions. The size dimension, which means whether the index is a large, mid, small, large, mid, small, or all.
Right.
That's the first question, right? So, for example, a mid cap momentum 50, right, is momentum later, but mid cap first,
Yeah.
right? So, I need to position that in the mid cap dimension or size dimension first. Am I comfortable with mid cap or not? Is the first question. Momentum comes later, right?
Right.
Nifty 200 momentum 30 is a large cap momentum 30. So, it's a large cap first and then momentum later. So, that's the first thing to keep in mind, size dimension. Once the size dimension is clear, then comes the attribute dimension, which is whether it's a sector or a factor or a theme, right? In terms of objective. So if it's momentum, for example, it's a factor for me. I should know that high churn, high risk, high drawdown. So that answers the metric that you spoke of. All these numbers will come for me to quantify the risk involved in that index. So if it is momentum, it will have high volatility, it will have high drawdown. If it is low volatility index, low vol index, it will have lower volatility and lower drawdowns, for example. So these are the numbers that will fit in well once the objective of the index is very clear in your mind.
Got it. Okay. So let's say if a broker has a positive view on, say, financials or consumption, how should they decide whether to express that view via a sectoral index, a thematic index like India consumption, or a factor index built on Nifty 500?
Right. So, as I said, the example of sector versus theme. So it all depends upon what my view is. Is my
Okay.
view broadly on auto, or is it on EV, or is it on mobility? And accordingly, I need to act upon it because the returns can vary significantly. So if you look at Look at this on the right-hand side. Over the last 1 year, auto has delivered 20%, EV has delivered 3%, mobility has delivered 17%. They sound similar,
Yeah.
but significantly different returns. Now, my question is my view on auto, is it on EV or is it on mobility? Because they are not same.
Yeah.
If my view is on mobility, I'll earn 17 or I have earned 17. If my view is on EV, I've earned only 3. So accordingly act upon my view by choosing the right index.
Got it. So I was going to ask you to share examples where thematic scheme indices help. You just showed us.
Yeah.
So from NSE Indices perspective, what are your top ways that a broker, IIA, or PMSs are actually using this indices today? Is it benchmarking only? Is it also product design? Or is it risk monitoring? Or is it used for researching stocks?
So all of them, all of them. So mutual fund typically would use it for passive fund product creation. Uh, it will also use it for active benchmarking. A PMS will use it for creation of custom indices that they will either use it as a quant model or a model portfolio around which they will optimize. An insurance company will use it as a benchmark because recently they are also started passive, but traditionally they've been using it as a benchmark, and we customize those indices also for tuning it to IRDAI guidelines.
Okay. And I know you're short on time, so I'll just let you go after the last question. Could you discuss on how institutions use strategies in their indices like Nifty 500 Momentum 50 or low volatility 50 in their core satellite portfolios, or when do they rotate between different factors?
I think it's a function of their risk appetite. So, an average risk appetite, because institutions would also include treasuries, for example, which would typically have a low risk appetite towards investments. On the other side, prop traders would have a high risk appetite, for example. So, an average risk appetite investor would have a mid to long term allocation to traditional products like Nifty 50 or Nifty 100, and would have which is the core of the portfolio, with a tactical satellite exposure to other strategies depending upon their views on sectors, sector ETFs, on thematic ETFs, or on factors using factor-based ETFs.
Understood. So fantastic. Amanji, thank you so much for your time. It was a very insightful discussion. I myself have been closely tracking the Nifty Indices, website for last 6 years now, and I can attest to the fact that that it consistently delivers high alpha. So the data has to be drilled down into, but yes, the stuff on is absolute gold. So thank you for what you do. Please continue.
Thank you for having me. It was my pleasure to share my limited understanding of what we do. Thank you. Have a nice day.
Thank you so much.
Yeah, Amanji, before you leave,
Yeah.
want to ask one question that this details like classification of indices and components that members will get on the website, right? They can
Yeah,
find.
absolutely, absolutely. In fact, members will get a lot of other white papers and research papers also on our website, which is niftyindices.com.
Correct. And can we get this presentation for sharing it to members?
I'll have to check on the compliance side for
Fine.
that.
No worries. And thank you once again for uh, uh, taking time out and educating our members on the subject.
My
Thank you, sir.
pleasure. Thank you. Thank you.
Yeah. So now I invite Mr. Himalay Joshi for his presentation. Mr. Himalay?
Sure, thank you. I'll just share my screen so that it is there. Yeah, let us know if you could see my
Yeah.
screen.
It is visible, sir.
So, good
Yeah.
evening, everyone. Thank you for this opportunity. So, today we would be talking about how to read markets using the Cogencis Terminal. So, most of you might know that Cogencis Terminal is a multi-asset platform which covers real-time data, news, and sophisticated analytics, which would help you take your decisions better in the market. So, I'll be taking a workflow of a general equity trader, that how he monitors market, and then I'll be showing you how you can do it from the this Cogencis terminal. So basically, the first thing you might want to do is we want to monitor the market. So first thing you can do is when you come to office, you would want to see that how world indices are doing. So you would see here that world indices Asia is roughly negative today, and then how America's closed yesterday. So it was a flat closing yesterday, and then with that we have a news brief application, which is a curated news brief application, which would give you all the information regarding the markets. So if you're not there, so in the morning when you join the terminal, you would see that what all international markets and all is showing. So that way it would be useful for you to see this. Again, it can be top news, that what are the top news which are there, trending news, everything. So this is the curated news which is useful for you to make your morning notes. Next thing I want to know is what are the economic events which are planned for the day. So these are the economic events which are planned for the day. So these are the days for today. I can also search it for tomorrow, that what are the events which are planned for tomorrow. So I can just check that if I want to plan my day or if I want to plan my week, I can just see that which all economic events are there. And then I can take decisions based on that. I can come to the locking shares. So next part, I want to see that which are companies whose locking shares are actually getting released. So that I can check here. So that these are the different IPOs or OFS which were there recently, which were allotted. And then today, I can see that when the locking shares are getting released. So as of today, 16, there were no locking shares which were released. So next is Euro Patrick sales. On 21st December, these many locking shares would be released in the market. So this is very good to track that which all shares we can see liquidity in the market today based on this part. I can also go to company events calendar. I want to see that which all companies might have some results or this thing. So I can go here, I can select for today what all events are there. I can also select different event times. I have selected board meeting here. And I can also select what kind of events I want to track. So suppose I want to track financial results. So here I can search for any one company, or I can also search for an index. So I can just type out an index and it would just come. So currently I have selected Nifty 50. I can also write maybe Nifty 500 I want to select. The company would come here. I can just select that and just click on apply. The moment I click on apply, it would give me a filtered option. So this is the results which were there. So I have selected last month what all results were there. I can see the resource document. So whenever they file the results, I'll get the what is meeting intimation, and what was the result and all. So this is all exchange publications which we would get here. With that, I'll also get what was the net income and EPS, and this is the actual figure and this was the estimated. So whenever it is less than the estimates, it would show you in red. Whichever is beating the estimates, it would show you in green. So it would actually give you a hindsight that what actually happened with this company. So if I want to see the company fundamentals, I can just click on this. I can just go to company description and then this tab would open up. So this would actually give me the company description of all these things. So I can go to management. I can see that what all related companies are there. I can get the ownership data, the trend of ownership, any bulk and block deals which are there, the exchange filings data, and due diligence if there are any cases or index of charges. So this is mostly for a person who want to do the fundamental analysis of the company. So this would give you good fundamentals. I can also load the fundamental analysis application, which would give me the fundamental view of that stock. So basically, I can see annual reports, then interim balance sheets. I can see segment finance. If I want to see the investments, I can just go to investment schedule. It would show me investment schedule also. And then I can also select whether I want to, how much duration I can check. So I can go back to a custom duration. I can also load history of 20 years and just check that how I will get. I'm also getting the operating metrics of it. So if someone wants to do research on that stock, so every data is available for the research personnel to do it. I want to now see that how the estimates of this stock is there, because I saw this, there was a result here. So I can just go to earnings estimates. And then in earnings estimates, I'll get a view that what all the brokerage houses are saying. So this is the consensus. 81% are giving buy call. Those are 29%, 29 brokers who are giving buy call. And then what is the estimated upside and downside based on their calls? So basically the target range for Titan company, it is showing is 3450 to 4700. And then I can also see the different estimates which are there. So these are annual estimates. I will get the forward estimates of this. So I can get the forward PE, PB, then net income, EBITDA, revenue, everything. So I can just see that what all the consensus are there. This is the mean of all the brokers which are available. I can also get the mean of maybe median of all the brokers, and then it would give me a view that what would be the mean. I can also select it to the quarterly and get it there. So once I have done this analysis that this would be the stock for which the results would be there, I can also now go to market opening and track that what all things are there for the market opening. So this market opening tab would give you that what exactly the bulk and block deals are there. So you would see that the bulk deals which were there in the morning, you could see the bulk deals which are there. So these are intraday bulk deals. And then earnings for today. So these two companies had earnings for today. So that is what it is showing. So you can also see what was the market change in that particular companies. And then I can also see order wins data. So order wins data we actually curate. We actually get the data from the notice bias. So this is the order wins data. So I can just select that as of yesterday, these 4-5 companies got the orders, and then how much order it got. So it would be in crores. And we also track the status of it. So we have seen that some orders which are allotted are revised, and also if you just go down. So for AFCON's infrastructure on 12th of December, we got some order, but it was revised. So you will also get the comment that why it was revised and how it was done. So that way you would also get the order. So if you want to do the projections on the order book for the company, that can be also done. So again, coming back to my screen here. So during the market, you would also, the moment the market opens, you will get the dynamic quote list. So we have different dynamic quote lists. So this particular quote list would show you that what is the highest stocks which having the highest volume. So you will get the latest volume and you can compare with yesterday. And these are the highest gainers in the stock, so which are giving the 52-week high. So these are very close to 52-week high, and which are or which might have breached the 52-week high. So you will get those stocks here. So there are different dynamic screens which we have created so that you would get the latest available information on that part. So if I come to market monitoring, so this screen basically can be used when the market is actually on. So you can just see that I'll get the real-time news here. I have created the constituents of Nifty 50. I can create any constituents of my quote list. And then this is the chart for technical analysis if I want to do. And this particular application would give you the volume distribution of the chart. So in one go, I'm actually seeing everything here. So if any new news come, I can monitor here. So this is basically when during the day I want to monitor the market. One more thing which is very useful for a broker is actually the notice wire. So we get the real time notice wire from NSE and BSE. So I can just click here. The moment it is filed on the exchange, I'll get it here through the feed, and I can just open it and check it that how the notice wire is, and I can just read about it and this thing. So this is in real time. You would get this to do the analysis of any news coming to the market. So basically, this is all the applications which I try to use and show you that how you can monitor markets in minutes, starting from the world market in the morning and then throughout the day, how you would monitor it. So we have different applications. So like if you want to track IPO, I can just come here. I can just see the IPO overview, and I can see that what all new IPOs are coming in the market, and then what is the status of this. So for the last 6 months, there were 201 which were listed, 2 are upcoming IPOs, 4 are open IPOs, and 5 are closed. So which would be listing. So we also give you trend that what is the listing gain and listing gain and loss of the company. So every month, how many IPOs have come, how many are showing listing gain, and how many are showing listing loss. So that way you can actually monitor the trend that how the IPO market is going. So suppose now I am interested in ICICI Prudential, I can just click here and open the IPO details page. So this would basically give you the IPO details of the stock, that who are the lead managers. I can download the RHP document from here, and this basically would tell you that what is the financial overview of that IPO stock. So I can just see that how the net profit, net income, basic EPS is changing. So these are the few important parameters to decide whether you want to invest in the stock. And then this would be useful when you do the analysis of a IPO. So that is also available here. So this is how we can actually monitor the market. So any questions we can take, or yeah, if you are interested, you can reach out to us, and then we would be happy to show you the entire demo of the application.
Hi Himalay. So one question: how do we do this? How do we reach out to you in to have a further details about demo about the product?
Yeah, so we have our help desk number. So we would be putting it in the chat group. We will also be sending to you so that it is easier for all the participants to reach out.
Done. Also, now, do we have an API module? As in, can I access the data not from the application but through the API? Is that a provision that we have as yet?
Yeah, so we also deal into enterprise solution models where we can give you data feed and then you can use it in your applications to do that. So based on the use case basis, we also provide API solutions for the customers.
Fantastic. Well, those are my questions. Shital, over to you.
So I request members, if they have any query, they can put it in a chat box. You can wait for a minute. Sir, any closing remarks? Any closing remarks as in related to topic to summarize, Mr. Himalay?
Sure. So just to summarize, then we have a platform which is multi-asset platform here. So which can be used by all the market participants, be it fixed income, be it equity or forex or any other derivatives asset class. They can use this application to get the real-time data, the real-time news, and then sophisticated analytical tools which can be used for their decision making. So if you liked it, you may reach out to us, and then we are happy to help you on that part.
Okay, so there are no questions. So again, I would like to thank NSE Indices, NSE Cogencis, Mr. Aman, Mr. Himalaya, for giving time out and educating our members on different Nifty indices. There are a lot of varieties. I request members to have a look at it and start using trading on it. And also, Mr. Himalaya has given presentation on analyzing markets, Cogencis terminal in detail. So I would also again request members to look at it and explore the opportunities. Yeah. So I also thank members for their participation, and thank you, Chairman, Sir Mr. Arjun, for his welcome remarks. Thank you, Himalaya ji, once again.
Thank you. Thank you for the opportunity. Thank you.
Most welcome. And if you feel that we should have one more webinar on the subject, we are happy to do the same.
Sure. Thank you. Yeah.